Thank you, Tom. That really set out a lot of challenges for the day. That's great. So ladies and gentlemen, we're going to move toward our first panel, and I think they will come join us on stage, and we will have opening remarks on that first panel from CIBC CEO Victor Dodig. Thank you.
Morning, everyone. It's really hard to follow Tom Jenkins. He's incredibly inspiring. He paints a true and three-dimensional picture of what we have to do as a country to bring growth back to Canada, and I'm going to try and do my best to follow Tom. Ed, thanks very much for having us here today and inviting us to talk at this conference, both as a panel, but me to start off the panel with a few remarks. I know I'm in great company here with Dominic Barton, John Manley, Bill Morneau. It says a lot about the meaningful nature of this forum and what we're trying to achieve for Canada collectively. Let me come clean and say that it's not my intention to stand here and offer the definitive recipe to get us past 2% growth. Frankly, the precise number isn't what matters. Growth's going to differ across our country, but quite simply, this is all about how do we maximize growth in Canada and make Canada an economic leader on the global stage by generating sustained growth across sectors and growing our economic output, and creating more high-paying jobs. As a starting point, it's helpful to look back at the period since the economic downturn a few years ago. It's always good before you start moving forward to think back to where we're starting from. We've lost a significant portion of our economic activity in Canada. Specifically, we've lost 17% of our output. In Alberta alone, we've lost 40,000 high-paying jobs. The post-financial crisis world in Canada has really had an adverse impact on our economy. My message this morning, however, won't be to question if we've kept up that capacity or done something more to save the jobs. I'll leave that to others. My point is that Canadian leaders, all of us, from all aspects of Canadian society, have to start harnessing innovation to create the conditions for sustainable cross-sector growth now and into the future. That means that leaders of our post-secondary institutions have to work more collaboratively with the private sector in order to produce the skills and capabilities Canada needs to generate new ideas and move our economy forward. Much of what you'll hear in our remarks, and I'm sure from the panel, will reinforce some of the things that Tom talked about earlier. It means that our private sector leaders, including leaders of our financial institutions, our banks, our insurance companies, our pension plans, have to do a better job at recognizing where there are gaps in capital and expertise so our companies, particularly in the small and medium-sized sector, can grow and achieve scale more quickly. And it also means that those players, along with all levels of government, have to work together to build that ecosystem that favors innovation, productivity, and growth. That notion of collaboration and ecosystem is something that will help drive growth in our country. And on that, I've been vocal in my belief that our banks, our insurance companies, and our pension plans need to come together, working with our government to establish a sizable Canadian business growth fund, similar to the one that they've created in Great Britain. The basic model would be to fill gaps in the current Canadian funding landscape, but only where no other options currently exist. Such a fund would provide patient, long-term capital to small and medium-sized growth enterprises, those that are already past the venture funding stage and need the sustainable capital for future growth, as well as job creation in Canada. But equally important to the money that we would provide in a fund like that would be the expert talent, the expert advisory committee that would be paired up with these companies. There are many retired and active executives and academics that could help our companies with that capital in terms of their R&D needs, in terms of their growth and commercialization needs, selling abroad, advice that many entrepreneurs are in need of to grow a stronger and deeper base of companies in the small and medium-sized sector in Canada. I've been discussing this concept with stakeholders in government and the private sector, and I hope to see it launched very soon. I know our Finance Minister, Bill Morneau, has been advocating for growth across all sectors of the Canadian economy, and we have a role as the banks, insurance companies, and pension plans to make sure that we're supporting our small and medium-sized enterprises grow. Now, as you can see, I'm a big proponent of collaborative approaches to growing our economy. But I also think it makes good business sense. And I think we have to think differently. And not only be collaborative, but also think differently in terms of how we have to compete. And let me give you an example. At CIBC, we compete globally with institutions that are much larger than we are. We would rank in the top 50 banks in the world today in terms of market capitalization. But we're not number one. We're closer to the bottom end of that top 50. So we have to think differently. We have to solve problems differently to remain successful. We have to be more nimble, we have to be more strategic. There's certainly rationale. For instance, last month, we launched an alliance, a strategic alliance, which is a new concept to banking. We launched an alliance with National Australia Bank and Israel's Bank Leumi. Why did we launch this alliance? Well, it's unique. It's the first one that's been created in banking, and we launched it with the whole premise that we don't have all the best ideas. We wanted to bring partners into our circle that don't compete directly with us, but have business models where some are more advanced than ours in certain areas, and ours are more advanced than theirs in certain areas. And we can come together now to develop products and services, work on cybersecurity, identify fintech companies that we're all coming across in various jurisdictions to help each other grow. It's not unlike what you've seen in the airline industry, where airlines have come to form Star Alliance, One World, and the Sky Team. I think the same thing is holding true for banking, as banking becomes more regional in nature and not simply global in nature. I think that whole notion of thinking differently applies not only to companies, but it also has to apply to countries. And Canada is one that has to think differently in terms of how we compete on the global stage. I mean, we're not the US, we're not Germany in terms of our size, we're not as volume-based as China is, but if we think about how to compete on skill, strategy, and innovation in our own specific way, we can carve our own place in the global marketplace and help our economy grow past that 2% level once again. So I talked about our small and medium-sized enterprises. I don't want to use the term fact-checking because I think it's been used a lot in the US political debates, but let's fact-check for a second and go to Statistics Canada and go to John Baldwin, who's a bright economist that works at Statistics Canada, who looked at the productivity in small and medium-sized enterprise. And he compared Canada to the United States. So if you look at the facts, in the US, small companies account for 56% of the total hours worked in the US economy. And when you measure their productivity, as measured by nominal GDP per hour worked, they're 67% as productive as large companies. That's where scale has a role to play. Now, if you compare the Canadian economy, small and medium-sized companies account for 70% of hours worked. So more than the US. Yet our productivity here when compared to large Canadian corporates is 47%. So what does this mean? I think it means we need to create the conditions to both increase the productivity of our small and medium-sized enterprises while helping them achieve greater scale. This isn't to say that we shouldn't be focused on large corporations, because we play a role in that ecosystem as well. We really need to start thinking about how to make that small and medium-sized part of our economy, which accounts for 70% of the hours worked, more productive, more scalable, and a greater contributor to our economy. And all of this puts a huge premium on improving our labor force. The intellectual capital and the people with the skills necessary to fuel innovation and productivity in a modern economy. We need to increase the proportion of STEM graduates. You've heard Tom talk about that this morning. Science, technology, engineering, and mathematics. Really important skills in an economy that's becoming increasingly service-based. But we need to ensure that all our graduates develop much stronger literacy, numeracy, and problem-solving skills. We need to bridge the gap between university graduates that are overqualified for the jobs they end up with and the frustration that's really felt by some employers who can't find the graduates with the skills needed for the jobs they're hiring. There's a gap there, and this is where our post-secondary leadership needs to play a role in closing that gap. We have to embrace disruptive and transformative change across our economy. embrace the changing skill sets needed for emerging jobs, and challenge ourselves to train people for jobs we cannot yet imagine. Jobs like experts in mobile banking, who only 10 years ago did not exist. That's how we have to start thinking about our economy. But to be successful in bringing about these changes, Canada needs to address some other important issues as well. We need to build a stronger business ecosystem that encourages scale and commercialization, an environment that helps local companies grow into successful global players. Companies need help developing their marketing and sales forces, the manufacturing processes necessary to reach and serve new markets, and the legal and intellectual property expertise to protect their discoveries. They also need strong relationships with financial institutions who understand the dynamics of innovation, the value of partnerships, and are prepared to advise and facilitate growth. That is indeed the role that financial institutions play to help businesses prosper. And I want to pause here for a second and make an important point, because oftentimes we talk about innovative companies and it's synonymous with tech companies. But an innovation company is not simply a tech company. Yes, we need a thriving tech sector like the one we have here in Ottawa, but we need to think about innovation throughout our economy, in the natural resource sector, in the energy patch today. There's a great deal of innovation going on to make sure that we're producing our natural resources in a more responsible fashion and establishing a leadership position for Canada in the global marketplace. That would hold true for farming, that would hold true for retailing, that would hold true for manufacturing. It has to be across the board. Let me give you an example of how that's happening with a client of ours. And I'll give you an example of how it's happening at CIBC. So I'm going to use the example of NewCap. They're a player in the automotive parts business. In 1999, they introduced a technology that creates a better bond between your brakes, pad, and backing plate. The material that actually stops your car. Now, I think we can all agree that it's really important for that to work. Basically, rather than using an adhesive, they actually developed a Velcro for metal. It's stronger and safer, and it's been sold to they've sold 750 million units worldwide. But more importantly, if you fast forward 15 years to today, they invested heavily in research and development, and they introduced something called grip metal. So something that was started with simply using it as an adhesive in manufacturing brake pads is now having large-scale application in carbon fiber. It's having large-scale application in aerospace, marine, and the automotive sectors. It may seem straightforward, but that's what innovation's all about. It's about taking good ideas and making them better, making them bigger, and making them here in Canada. Now, if we look at CIBC, banking's changed dramatically. I always like to use the example of more people bank on this than any other channel that we have today. 7 years ago, this didn't exist as a banking channel, and today it does. It's changed dramatically, and our job is not to just rest there, because this is a game that has no finish line. This innovation game is a game that we need to continuously focus on as an organization. So what are we doing? Well, we've put up a lot of our bright minds in a place called Mars in Toronto, an innovation center, where they're close enough to head office, but sufficiently distant to be creative, to think about where banking might be going, to think about the role of fintechs and the role they might be playing in our business. This is the place where we launched the Apple Watch, banking on an Apple Watch, not the Apple Watch itself, and we were the first bank to do so. And we did that largely with Waterloo Co-op students who did it in 7 weeks. They had the right environment, they had the right incentives, and they did it at breakneck speed. And that's not something you think about when you think about Canadian banking. We're also doing that in other partnerships that we have with fintechs. We signed up a relationship with a company called Thinking Capital. Thinking Capital has been working on algorithms that help advance credit to small business in 1 to 3 days. It could take us multiples of that. So we've signed up in a strategic alliance with them. We've embedded them into our system, and we're seeing that have real impact in getting credit to our small business clients. Each of us, as I said at the outset, has a role to play in building an innovation economy in Canada. Each of us, whether it be in academics, in business, small and large, or in government, has a role to play to get our growth rate beyond 2%. Let me conclude my remarks there. I'm going to hand it off to Theo from Bloomberg, who is going to moderate our panel, and I'm going to join my esteemed panel here to answer any questions that Theo may have for us. I'm sure he'll throw us some curveballs. So, Theo, over to you. Thank you.
Thank you, Victor. All right, before we get started on growth, let me just introduce everyone. You've all met Victor. To Victor's right is Chris Ragan, Associate Professor at McGill in economics, and was my professor a long, long time ago, even though he looks younger than me. Roberta Jamieson, who is the President and CEO of Indspire, an Indigenous registered charity that focuses on education. And Michael Sabia is President and CEO, to Roberta's right. Michael Sabia is President and CEO of Caisse de dépôt et placement du Quebec, Canada's second biggest pension fund manager. Let me just set the stage a little bit, okay? A decade ago, no one thought we would be here. I mean, we all kind of knew the demographics were bad, but at the time we were living in, a period of uninterrupted growth. Stock markets were rising, home prices were rising. Everyone was happy. Fast forward 10 years, and now we live in what they're calling secular stagnation, right? A bizarro world of negative interest rates, low growth, low productivity growth. It's just the demographics are still there. It's just a gloomy outlook. And how gloomy is it? I mean, Canada this year will grow by less than 2% for the second straight year, which is only the third time since World War II that Canada's had back-to-back years, including recessions, of sub 2% growth. So things are not looking that great, and the question is, on the growth front anyways, and the question is, can we do anything about it, right? And we have a government in power, Prime Minister Trudeau's government, who believes that indeed we can do something about it, that governments can play some type of role in boosting the growth rate, which explains why, you're all here, because I think, well, you're certainly advising. The three members here of the panel are actually on the Government's Growth Council, not except for, okay, well, the two members here are on the Government's Growth Council. Victor thinks quite a lot about growth and innovation for a bank CEO. And we're going to talk about innovation, we're going to talk about infrastructure, we're going to talk about labor markets, we're going to talk about competition. But before that, I want to get everyone into the conversation right away, right off the bat with a quick question, elevator ride discussion, right? In 1 minute, can you tell me if you believe that Canada can indeed break from low growth? And we'll start with Victor here to my right.
Well, I absolutely can believe it, and just because I didn't make the cut for the government's panel, so that's why I'm here. I absolutely believe Canada can. We have, look, we're a three-pillar economy right now, broadly speaking. Natural resources, real estate, and financial services form a big part of our economy. And when you look at the development of everything else in our economy, the diversified sector, there's a real opportunity to diversify beyond what we've been endowed with as a country. And I believe that there's a real growth opportunity to take that 1.6, 1.7, 1.8% that we're seeing well beyond 2 by growing that diverse pillar, that fourth pillar of the economy. And there's a lot of talk about how innovation will drive that. There's some skepticism around whether we're just speaking broadly about a concept of innovation and whether it's going to get ingrained in our economy. I don't think we could talk sufficiently about it. It is a world that is completely changing. And we as Canadians have the capital, have the wherewithal. We're liked around the world. We've got our front foot on the service-based economy, and there's a real belief that I have that we can crack that 2% on a consistent basis going forward.
So Chris, Victor says that if we just reallocate some of our resources and change our focus, we can actually generate more growth. What do you think?
Well, any economist would say if you reallocate resources in the right way, you can work magic. So I would say yes, we can improve growth. I think we need to think about our short-run situation following a financial crisis. Following financial crises, growth is always slow. There's deleveraging, there's lack of confidence, there's people repairing balance sheets, there's basic lack of demand. So there are challenges there. There are the demographic challenges that are inevitable given the aging of the population, but there are things you can do. But there's also kind of the things that we should always be thinking about doing, what you might call structural things. So improving labor force participation among vulnerable groups, doing better on infrastructure, doing better on competition, doing better on trade, all of those things will come up.
Roberta?
Well, I woke up this morning watching TV where they were celebrating Columbus Day, ironic for me, and being in unceded Algonquin territory this morning, nonetheless. So you use the word bizarro, a little bizarro. I am the non-economist on the panel and maybe one of few non-economists in the room. I really want to challenge us to think differently about growth policies and the actions we need to cope with the economic situation we see. I think it's time in which the bottom line in our country becomes our collective well-being. I've spent an entire lifetime watching Canada largely ignore, reject is probably too strong a word, but certainly ignore the potential that Indigenous people have and wish to bring to Canada's economy. You might think I would advocate that space should be found for Indigenous people to contribute. I am. But I also want to talk a little bit in a minute about the Indigenous perspective on the topic of this conference. We remember an old Canada where the laws were designed to keep Indigenous people out of the economy, turning us into farmhands and housemaids. Colonization, marginalization, all of those things that happened as part of our history that have become a permanent feature of Canada's economy. But I do think we have an opportunity. And I think it's an imperative, not just an opportunity, to make a fundamental shift. I think we need to start making space so that Canadians of all origins, old, new, recent immigrants, original peoples, make our contribution. We need more women to teach all of us the values of cooperation when competition's not the right thing to do. We need Indigenous people to step up and share with us the knowledge on living in harmony as you develop the economy with the land. We need people with disabilities to teach us the value of accommodation, the power of tenacious will, the value of making sure no one's left behind. And we need the gifts that people who are making Canada their new home to contribute. I think if we make a space for all of us in Canada, we will be the beneficiaries. So I end where I began, which is we have a lot of work to do to make this an economy in Canada in which the bottom line becomes our collective well-being. And I think we need to get started yesterday.
Michael, Roberta is making the case, really strong case for inclusive growth. What are your thoughts on breaking out of low growth?
I'll make a few points. First, in discussing growth in Canada, I think we got to stay focused on a couple of fundamentals. First, Canada's a small, open economy. And what happens in the world affects Canada dramatically. And when we look at the world today, we see a reasonably gray picture. Global growth may be in the range of, say, 3% for the foreseeable future. To put that in context, it wasn't very long ago that the IMF used to call 3% global growth a recession. They've changed that recently. So we're in a situation of tepid global growth. That the result of a whole bunch of things. You mentioned demographics, it's technological change, integration of China into the global manufacturing process, the end of the debt supercycle, that the result of the financial crisis. A whole variety of things which contribute to a picture of, in my view, chronic demand deficiency in the world today. Now, can Canada address that? Yes, I think Canada can. But it's very important that this issue get addressed on a more global basis and not just on a Canadian basis. So if there has ever been a time, and I think that the wake of the financial crisis was certainly one, where global coordination of policy is important, this is certainly one of those times. Now, what's required at that level, and I think the same thing is true here in Canada, one, we have to get past this maniacal preoccupation with monetary policy, because monetary policy's played a very, very important role, but it's not going to, acting on its own, it's not going to take us any further. Second, I think we have to break out of this ideological preoccupation with austerity economics and replace it with investment economics. We need to think about how we support growth. And that, in my mind, we'll talk about this later, but that, in my mind, calls for, really on a global basis, but certainly true here in Canada, very substantial, bold kind of investments in things like infrastructure. And I don't want to single out infrastructure because I say we'll talk about it later, but things that both help break out of the low growth trap that the world is in, and they do it in a way that they contribute to medium and longer term productivity. Because that, at the end of the day, is the fundamental problem facing the global economy. So I think that there are things that can be done. I think they're important things. I think they do require, and a few of my colleagues have used the phrase thinking differently this morning, and boy, there's never been a time where that mattered more, where I think on a global basis we need to think differently and break out of some of the ideological orthodoxies that we've been burdened with over the last number of years.
Well, we're actually going to stick with you, Michael, and talk about infrastructure right now and drill down to some of the policy areas. And infrastructure is an important one, obviously, given the bulk of the funding is going to infrastructure in terms of the government's growth agenda. Just a general, broad question: what role is there for the federal government in infrastructure?
Yeah.
What's an ideal federal infrastructure plan?
Well, would that I knew the answer to that part. But look, I'm going to respond to that question by and large from the perspective of an investor. I think this is a unique time in the world where there is, maybe for the first time, a broad coincidence of interest between, say, public needs for infrastructure and investor needs for infrastructure. Public needs, they're pretty straightforward. There are huge infrastructure gaps in the world. I think McKinsey Global Institute said there's $57 trillion, I can't count that high, but $57 trillion gap over the next 15 years in global infrastructure needs between what can be financed and what governments can do and what's needed. Ridiculously large number. In Canada, there's lots of different estimates between a couple of $100 billion and $1 trillion, so let's call it $500 billion, big numbers. That's got to get addressed, and it's got to get addressed because we need that infrastructure because it's so important to how we function as an economy. It is a critical driver of productivity. It makes the economy flow. And we need the short-term stimulus that I was talking about a minute ago, a productive kind of stimulus that enhances productivity, which is what infrastructure does. That's on the one hand, on the public need side. On the investor side, the world I live in every day is completely upside down. There's $16 trillion today invested in negative yielding bonds. In other words, there's $16 trillion hanging around where the investor is actually paying a government to take their money. There's $100 trillion today under management in the hands of long-term investors, people like us, insurance companies, sovereign funds, et cetera. About $40 trillion of that is in pension funds and sovereign funds. Now, from every morning when I wake up, here's the problem I face. For the last 5 years, stocks used to yield about 10%. Over the next 5, maybe 5. Fixed income bonds, they used to earn 5 to 6. They earn now 1 to 2. So what are you going to do? But you have to, in order to pay people's pensions, you got to find some returns. But that's not just us. That is happening on a massive scale around the world. So people are looking, investors like us are looking for opportunities to invest in things like infrastructure. Why infrastructure? Because it provides pretty steady returns and there's very low risk of capital loss. So the issue is, it seems to me, the social issue, the policy issue, is how do you bring these two things together? How do you use this enormous pool of capital in a way that's completely respectful of the public interest, but in a way that meets the public need for infrastructure? And that seems to me to be a central policy issue that we've got to unlock, to both unlock short-term growth, unlock productivity enhancement, and therefore unlock longer-term growth. How do you do that? I think one of the ideas, and I do think that we need to think boldly about this. I think around the world we need to think boldly, and here in Canada we need to think boldly. Not, I'm going to say this, it'll probably offend a bunch of people in the room, not in typically sort of incremental Canadian, let's try and see what happens, and then we'll check what the Americans are doing. Because that's a waste of time. We are so far ahead of the Americans in infrastructure in how we think about it. I mean, it's a joke. They're in the rearview mirror. So we need to be bold. We need to do things differently. So in my mind, one of the things that I'd do is I'd create an infrastructure bank. And I'd have that bank funded in part by government capital. And I'd use that bank and I'd give it a mission, a mandate that involves two or three things. First, to design big infrastructure projects in a way that attract people like us, so that every dollar of federal commitment triggers, say, $4 or $5 from people like us. So you get this tremendous multiplication impact of what can be done. That's one thing. Two, I'd give this organization, this new bank, the opportunity to structure and negotiate transactions in a highly expert way, because this is a technically complex area. And finally, I'd create inside that bank what I'd call a national center of excellence, where you assemble the expertise that's required to audit our national needs for infrastructure, and on that basis develop a national infrastructure plan. And I'd have that, obviously that's got to be coordinated with government, obviously, because there are important public policy issues there that have to be respected. But to unlock this and to bring together and to exploit this coincidence of interest that exists today between people like us and the public need for infrastructure, I think we need to create something new, because I don't think the old ways of doing this are going to work.
Victor, do you have any? Are you expecting any competition now from an infrastructure bank?
I agree with.
No, we're going to
almost
create
always agree with
opportunities for
Michael.
Victor's bank.
Very much so. I mean, what the underlying theme of what Michael is reinforcing is the public sector and the private sector coming together to kind of build a bigger, stronger, more robust economy. And it's part of our history. You know, if you look at institutions like the EDC, the BDC, the FCC, they've all played a role alongside the private sector, which includes our pension plans, which includes our banks, which includes our insurance companies, to help grow and stimulate the economy. That infrastructure bank is an important idea in today's day and age when long-term interest rates are quite low, to help us invest in that foundational element of our economy that will help Canada grow beyond that 2%. That theme of the public and private sector working together, that theme of the public sector not crowding out the private sector, is incredibly important. We are anchor tenants here in Canada. CIBC has been in business for almost 150 years. In fact, our birthday coincides with our country's birthday. Our job is to help families prosper and help businesses grow. And everything that the government can do to create policy to allow us to invest as an anchor tenant in our country is a good thing. Everything, and the only other thing I would add is everything that we do to bring capital into Canada, to make it be the destination to invest is a good thing. Turning our diplomats on commercially to not only represent our country politically, but also commercially to bring capital to Canada. And then making sure, and I agree with you, Roberta, this whole notion of inclusive growth is really, really important. It's talked about a lot today. Now, what we need to really get to are the granular solutions as to how to make that happen, because everybody talks about it in generalities. And Canada's solution is going to vary from Japan's solution, from America's solution, but we absolutely need to make sure that that growth is felt in the small and medium-sized business sector and is felt by all stakeholders in Canada, including our Indigenous peoples.
What do you think the provinces would say about a massive Canadian federal infrastructure bank? Is that, they've got their own plans as well for infrastructure.
I guess one of Canada's great advantages and also one of Canada's disadvantages is federal-provincial relations. And when I used to work in Ottawa, I used to always consider federal-provincial relations pretty much a black hole. But that's not a politically correct thing to say, I know, particularly given what I do today. In any event. Yeah, it's better. It's better. In any event. Look, I do think some level of coordination is going to be required. But I think that there's such an appetite now, and it's so widely understood among, I think, all levels of government, that something's got to give to make infrastructure happen, that I think the table's set to have some reasonable discussion between the federal and provincial government in the interest of getting this going. Because, another thing that's important here is the infrastructure that I'm talking about is big scale, hundreds of millions of dollars, infrastructure that can generate revenue streams, et cetera, and therefore attract people like us. But there's a whole other set of infrastructure that's equally important. Social infrastructure, meeting the infrastructure needs of Indigenous peoples, which is a huge challenge, I think, today. The more you use resources from people like us, the more you free up government resources to deal with those extremely important social and economic issues, because if you can deal with the infrastructure needs, say, for instance, of Indigenous peoples, you can remobilize them and reconnect them to the economy and create opportunity there. So it's also a question, and I think provinces are going to recognize the value of that for their spending and for federal spending. So it's also a question of, getting the benefit of investors like us, not just from Canada, but from around the world, to free up government to do other things that are really, really important.
Roberta, Chris, would you like to wade into the conversation?
Well, I'm glad Michael opened the conversation. Infrastructure. There is no infrastructure in most Indigenous communities. It does not exist. I think one of the issues that Canada has to come to terms with is whether we want sustainable Indigenous communities or not. And are we willing to make the investment to have them? For a long time, we've thought about migrating Native peoples will all go to the city and blend in. This has not happened. Next month, we will celebrate the 20th anniversary of the report of the Royal Commission on Aboriginal People. They said if we're going to close this gap in the country in economics and education in all ways between Indigenous people and other Canadians, it's going to cost us $38 billion. Wow. That was regarded as a lot of money for 98% of the then population to pay for 2% of the population. We're now, guess what, 4% of the population, fastest growing demographic in the country. And I invite us all to dust off a report done by then John McCallum, who was the economist at the Royal Bank of Canada. He did a report called The Cost of Doing Nothing. And it is, you can add another 0 onto what Mr. McCallum said, at least, maybe 2, because we have not addressed that issue, and we must. Infrastructure, Indigenous people would love to have decent drinking water, decent housing, decent everything, which other Canadians enjoy. So I think federal, provincial, important. There are other seats at that table that need to be occupied. But we are acutely aware of this now, which I think is the hope. I was at a conference a few weeks ago of ministers of energy and mines and resources, and every intervention at that conference mentioned the importance of coming to terms with Indigenous relations. And when we talked about Indigenous relations, the number one issue was education. But I'll have more to say about that later.
I wish I had heard something with which I disagree, because it makes these panels much more fun. But I haven't disagreed with anything. So let me just mention something that hasn't been mentioned. I think there's a danger, as important as infrastructure is, and it's tremendously important, and when you come from Montreal, as I do, and you drive along the Turcotte interchange and you see it falling by the ton, you think, okay, infrastructure is a good thing. And the Gardiner Expressway is only a few years behind. But one of the things that we haven't mentioned, I think there's a real danger that public infrastructure will crowd out, not in an economic sense, but in a conversational sense, will crowd out the focus that needs to be played on private capital. So, you know, Canada, if you compare Canada to the United States or other OECD countries, we have less equipment per worker, which is one reason why our productivity is lower than many countries. And so we have to think carefully about why it is that Canadian firms are using less equipment, whether you're talking about lathes or computer design things or big factories or fleets of trucks, whatever it is, the capital stock that firms typically need, they're not using as much per worker in this country as other countries. So why is that? Is it the tax system that's getting in the way? Is it something else that's getting in the way? I don't think they need subsidies. In general, subsidies are a bad idea, but I think we need to think very carefully about how to increase the private capital stock alongside the public capital stock.
I'm going to change subjects now and actually go back to Roberta here, because we're going to talk a little bit about labor markets. And it's one of the pillars, one of the policy areas that the government is playing in on the issue of growth. And I don't know if I hope Chris doesn't correct me here, but economists say that there's two ways that you can boost growth. One is increase productivity. The other one is increase the labor supply. And we'll get to productivity soon. But you know, labor supply is important. And you know, we've seen the urgency with which we're trying to get immigration levels higher. But there's also another way you can increase labor supply. I mean, you talked about McCallum as an immigration minister. He's actually, you know, associate labor minister, really. And but there's another way we can get the labor supply growing, is by increasing participation rates. And we've seen the success over the last generation, if you want, of the female participation rate rising and boosting growth. We've had less success with the Aboriginal communities. We saw some growth there in participation rates, but since the Great Recession, since the late part of the last decade, it's actually gone back. So, I mean, can you tell us, Roberta, what needs to be done to get Aboriginal peoples more engaged economically in Canada?
Well, I think education, education, and education. I think education of Canadians, frankly, about the contributions Indigenous people have made, can make, and continue to make to Canada. The stakes have changed. You know, how many Supreme Court decisions do we need to see to know that First Nations have a tremendous and recognized role in resource development in Canada? So that needs to be taken on board, and we need to see First Nations and Indigenous people as players, as contributors, not as the unacceptable social poor that we have to figure out how to fix, but as people who are empowered and entitled to control their own future. That's one thing. The other thing, I think, I'm going to refer us to another study for people to read on their own time. Matthew Calver of the Center for the Study of Living Standards 2015, talked about the importance of education and specifically education of Indigenous people. He said, if we close the gap between Indigenous people and non-Indigenous, by 2031, we would contribute $261 billion to the economy of Canada. It seems like a pretty self-evident business case that we should be making these investments. I'm with Michael. We need broad and different and bold thinking, and one of them is sustainable and serious investment in educating our young people. 4 out of 10 of First Nations kids will successfully get out of high school. 37%. 87% of Canadians will get out of high school. If we can't even get our kids out of high school, how are they going to get in the labor market? So I think it's important, the investment the government's announced for K-12 space, to change that picture. It's not going to change overnight. It didn't get to this position overnight. In the meantime, we need to invest in the capacity that is standing there waiting to be engaged. And I'm talking about the tens of thousands of kids, Indigenous kids, who have gotten out of high school, who are ready to go to post-secondary, but can't for lack of funding. One piece of information. Last year, I'm very proud that we at Inspire, with the help of organizations like CIBC, supported 3,800 kids through post-secondary education. We met 11% of the need of the students who came to us. So we're talking about a very small proportion that is getting access. And the biggest barrier to post-secondary success and trades and technology success for Indigenous kids is financial support. So that seems to me to be a no-brainer. And where is the investment fund for Indigenous post-secondary students? I'm waiting for that announcement, and I'm having a few pre-budget meetings later today to try and push the case.
I wanted to ask you, the conversation has changed over the last year on Indigenous issues, it seems to me. How would you grade the current government's record over in its first year in government on this issue?
I'm waiting to see the post-secondary announcement. I'm with bated breath. K-12, there has been an announcement. I think it's encouraging. I think we need to move quickly from announcement to action. One thing is clear about our communities. It is extremely difficult to build trust with us for very good historic reasons. It is very easy to lose it. And so we just need to reward the successes, and they're there. It's not all hopeless. You know, the Mi'kmaq people, they have a system that graduates 88% of their kids. How'd they do that? They run it. They're in control of it. It's curriculum that validates the identity of the kids as Mi'kmaq. They are succeeding. And the kids we support, I have to tell you, 93% of them graduate. So it is not all doom and gloom. It is there to be had. But we've got to recognize the success, incent more successes, require it of any company who wants to work in Canada, because we're all working on Indigenous land somewhere, to invest in the education of Indigenous people. And I think in this, to the global piece, and then I will yield the floor, Canada has an opportunity to lead the world in engaging Indigenous populations. The issues that we're addressing here in Canada are not unique. They are the same Indigenous challenges everywhere in the world. And Indigenous people are exerting and gaining greater control over their land and resources once again. And I think Canada can achieve the promise that we're destined for by leading in this inclusive way with Indigenous people and with all people in the country.
Okay, I'm going to move the discussion now to innovation, which is very much at the center of the Trudeau's economic branding. He went into the election campaign talking about diversification and being the party of growth, and the other guys were the Hewers of Wood party, right? And he goes to Davos and talks about resourcefulness and that sort of thing. And in the budget, he set this pretty lofty objective of turning Canada into a center of global innovation, which Canada has never been, right? So it's a pretty lofty objective. So the big question then is, whether they've oversold this. Is there a role for government in innovation? Victor, sorry.
I'm going to talk for 1 minute, and it's an idea that bridges the previous topic of labor supply and innovation. Because Roberta, you're very articulate about what we need to do for our Indigenous communities to help the graduates succeed in the Canadian economy in a very integrated way. You're very articulate about that. I think we all recognize that there's a massive technological shift that has dislocated much of our economy, and are we prepared for that innovative economy to attract that capital that's necessary to get growth beyond 2%? We've talked about what our universities need to do. I want to just add one specific idea on immigration, because I think Canada risks going from a G7 country to a G20 country to maybe a G50 or G100 country unless we increase the level of immigration and we actually heighten the focus on those individuals around the world who want to come to Canada with the skills that we need. And I think the point system, while it's served its purpose over the last 20 years, needs to be upgraded so we're attracting people with those skills that we need to help our economy grow. That's what's going to provide that level, another factor input into innovation. Bring those people who want to come to Canada, who want to contribute to the Canadian economy, who want to bring their innovative skills and ideas, and that point system can be enhanced. Because right now it's very general. It's not specific enough. Let's bring the best and brightest to Canada, because some countries are doing a very good job of squeezing them out.
Immigration is actually kind of tied into this whole of government approach to innovation that the current government has. But back to my original question, does government have a role in innovation?
Government has a role. It's always had a role in the Canadian economy in setting the table. Government has a role in putting together the policies where largely the private sector can participate more meaningfully over time. And I think that's really the goal here, is that we don't get crowded out. The private sector has enormous resources with the right incentives to help the economy grow. And everything that our government can do, and they're setting the absolute right tone to put together the policies in place and to facilitate the private sector investing in an innovative economy, should be the key thrust of what they're focused on going forward.
Now, one idea that they've floated is the idea of clusters and the high impact firms. Is that sensible? Is that politically viable? Can they just choose? If you had to choose 3 clusters to focus on in Canada, which 3 clusters would you choose, and which clusters would you not choose?
Well, if it were me, I wouldn't. Who are you asking?
Anyone.
Okay.
Yeah.
I'm going to choose 3 different ones.
I'm not going to choose.
I think
so you're going to have an easy time.
Is one of those clusters.
Look, I don't think. I think what Canada needs to focus on here, and where there can be a constructive role for government, I don't think governments are particularly good at picking firms and backing firms. And I think there's a lot of history around the world on that's probably not a good idea. But I do think that Canada needs to think about how, as a small economy, we can develop some winning activities in and around some important technologies that are going to change the way the world operates going forward. So I think government policy that can think about sort of vectors of technological change and trying to encourage, Chris and I have talked about this a lot in another forum, but trying to attract, for instance, foreign investment into some of those broad technological areas, not at the firm level, but at the technology level. I think there is a role that a constructive role that governments can play in doing that, because realistically, Canada is not going to be able to build positions across a broad range of technologies that are world leading. That's not going to happen. Canada, the Canadian economy is just too small for that to happen. But we can, and we are good at some things, and we do have some universities who are really good. I'm just thinking of one area that I know a few universities in Canada have carved out globally leading positions. That's artificial intelligence. That's going to have a big impact in the world going forward, and I think there are probably 2 or 3 others. But a focus on technology and the development of technology and using government's convening power to bring together what happens in a university with what's happening with pools of capital, with what's happening with entrepreneurs, and how they're bringing capital together to develop new ideas. I think that there's a role there.
Chris, we're going to go with you on innovation, and then I'm going to stick with you, talk a little bit about competition.
So quickly on innovation. I think what Michael just described is easier said than done. I think it is worth an effort from the government, but it's just very difficult to identify even the vectors of technology that you think are going to be important in which you want to invest, because they change. So it doesn't mean you shouldn't do it. You want to be very careful about doing it. The other comment about innovation is I think there's a danger in the innovation discussion, which is a very difficult discussion, because this is the holy grail of economic growth, and no government has ever come up with the way to drive innovation. But there is a danger that a focus on innovation, and in fact it was there in your introductory comments, gets juxtaposed against resources. Right? We should not believe that natural resources are uninnovative, and we should not believe that it's bad to be hewers of wood and drawers of water. If you've got water and wood, hey, let's use it. So when you think actually in detail about our natural resource sectors, they are tremendously innovative. Just imagine digging down 5,000 feet and getting oil sands with steam-assisted gravity drainage, SAGD, getting that stuff out of the ground. This is not easy. So we should not believe that innovation and natural resources don't belong in the same sentence. We've got resources, the world wants them, let's get innovative and let's develop them.
And I would even throw in manufacturing as well, because manufacturing is one of the most innovative sectors in this economy, and that's something that's lost in the discussion. We're running out of time. I want to get quickly to the discussion on competition, because that's another policy area that the government is playing in. The idea being, if you can open markets to competition, you drive productivity growth. So Chris, is there a lack of competition in this country? Is there something that needs to be done?
So in Tom Jenkins' talk, he talked about the elephant in the room being competition. There was a book written about, and this is not the only book written on this topic, but about 10 years ago by Bill Lewis from McKinsey, called The Power of Productivity. And what they found is that the single biggest explanator of what drives productivity growth in sector by sector, country by country, across the world was competition. If you can expose your firms, your sectors to competition, then that will drive the innovation, that will drive the productivity growth. So that is an underlying idea that we're talking about in the Growth Council. And then the question is, well, how do you do that? So how can you improve competition? Well, one way is to improve exposure to trade. So Canada is a trading nation, always has been, always will be, and we need those trade corridors to be working well. So how can we improve access to trade? Not just with the United States, but with the faster growing emerging world. So that's one thing. A second thing is, can we attract, and Victor mentioned this, can we attract foreign capital to come in, not so much to buy our existing firms, but to set up shop so that they can have access to the US market, or if CETA gets passed, access through Canada to the European market. So Canada is actually very well positioned to be a gateway to many countries. And Canada has a value proposition as a location for headquarters and for production that is pretty remarkable in terms of our labor market, our quality of life, our overall business environment. So I think we've got to sell that. So that's a second thing, is that investment flows, inward investment flows. Another thing is competition in sectors where there may be some types of regulation that are currently acting as obstacles to competition. So you could think about the airline sector, right? Do we have regulations that are preventing airlines from being as competitive as they would otherwise be? And I think the answer is yes. And do we have consumers that are footing the bill for that lack of competition? And I think the answer is yes. So airlines is interesting. Telecoms is interesting. When France introduced a fourth national carrier, and apparently the magic number was 4 in France, that the arrival of the fourth national, not carrier, but firm, actually dramatically lowered prices for consumers. So would that work in Canada? I know the previous government tried. It's not easy. But look at other sectors. Look at supply management. Supply management connects to the whole agri-food industry. Could we do better there? So I think there's a lot of areas here, whether you're talking about access to trade, access to foreign investment, domestic regulations, obstacles to competition. I think we need to look at all of it.
I noticed that Chris conveniently
I didn't mention banking.
He didn't mention banking because it's a
It's
very
only because you were here.
It's a very competitive sector.
We need more banks, 150 more.
I think what we do need is we need to have a very healthy financial services sector. Banks, insurance companies, our pension plans, our asset managers. And I think unlike many other countries in the world today that are struggling with their own financial systems, Canada has a very healthy one. But we, as a bank and as a participant in that system, very much believe in competition. Technology is changing the game. It's leveling the playing field. It's reducing the barriers to entry. And we are adapting to that. It's our job, we work for our shareholders, to make sure that we adapt and continue to stay strong. We work for our clients. We just invested in a bank in the United States because we know that the trade flows with Canada and the United States are a significant part of our clients' businesses, and we need to be able to support them on a north-south basis.
So would you be okay with eliminating the foreign ownership restrictions on the ownership of Canadian banks?
Well, that's a charged question, Chris. You know what? I think the way the system works today is quite good. It is. We are quite. No, but we are quite competitive. You know what? We would be able to compete in that type of a system as well if that was something that the government wished to do. We need to respond to that. But
what's going on is 2 comments. Quick first, because Victor, you mentioned it. I mean, fintech is going to redo your business.
Yeah.
And in some ways, what's happening technologically is going to have such a wave of change through financial services on a global basis that stuff like foreign ownership restrictions, it almost takes on a little bit the feel of King Canute trying to turn back the waves, because I was in India last week and I met a bunch of entrepreneurs who are building fintech companies, and these are people they think globally. They don't think about India. They think, I'm going to build a company that's going to redo financial services on a global basis. And that's just India. There's lots of this going on in other countries. So that's one point. I mean, fintech is just an enormous driver of change. Second thing, Chris said something really important.
I love it when Mike says that. He doesn't often say that.
I say that all the time. But Chris said something really, really important that I think as Canadians we don't think enough about. And that is, I'm paraphrasing him, but it is a good time to be Canadian in the world today. And we shouldn't lose sight of that. We shouldn't just, get up every morning and read a couple of pages of the Globe and Mail and figure out, okay, well, that's what's going on in the world. Because by and large, the Globe and Mail only talks about what's going on in Canada. But in the world, whether it's in China, whether it's in India, whether it's in Mexico, whether it's in Brazil, whether it's in Europe, the welcome mat is out for Canada for a whole bunch of reasons. And that creates, in my mind, an enormous spectrum of opportunities for us. And our place in the world, our capacity to trade in the world, our capacity to attract the right kind of foreign investment, long-term patient capital that needs to be brought into the country to help us grow. But our position in the world today, a more diverse country, a more open, a more tolerant country than the one to the south, all of these things combine at this one moment to really make this, I think this is a really interesting moment in Canada's position, Canada's history, and our position in the world today. And there's a lot of opportunity in that. And you mentioned one of the things that government can do. And to be fair, I think the new government, the current government has done some of this. They can be very good salesmen for Canada around the world. And we need that to happen because there's an enormous receptivity to Canada in the world today, and we need to capitalize on that.
We have 4 minutes left. Anybody want to make some? Well, we have 4 minutes left. Maybe time for one.
One intervention.
Yeah.
Well, I want to agree with Michael that Canada has a great deal to offer. I'm a very proud Canadian, and I think we do have a lot to offer the world, frankly. I think we need to look inside, though, to see what's in our inventory. And one of the areas that we talk about innovation and competition, innovation doesn't always mean something new, something just invented, something, you know, we have a lot in this country that is in Indigenous knowledge that is tremendously valuable. Whether you're talking about the field of healthcare, traditional healing, conflict resolution, these are areas where Indigenous people have developed a tremendous expertise. Trading nation, I think we've been a trading nation for a very, very long time in Canada, before Confederation. How to create partnerships, how to resolve disputes, all of these things we have right here, right now, right at home. And if we would mine these things and share them, we could offer even more around the world.
Well, I can't think of better final words than those. Thank you very much, everybody.